Tim Stevenson, manager of EuroTrust. Is the trust currently geared, Tim?
Yes, certainly. We've continued with a level of gearing in the Henderson EuroTrust. We've been utilising some gearing pretty well since about November, December last year. We've been using at times most of our 15 million facility. We're using slightly under the total amount at the moment. And I'm quite comfortable with where we are at the moment in terms of the amount we're using.
Is earnings growth finally going to become a reality in Europe? There have been plenty of unkept promises in the past in this regard.
Absolutely, and we've been one of the people that actually said a year ago that we expected earnings growth and then had to eat humble pie in the course of the year because that earnings growth basically never came through. Now, the reasons for that a year ago were because of the move in the exchange rate and the fact that the whole European economies just did not start to actually recover until much later in the year. Now, what's happened since then is that once you removed that sort of blockage, which was caused by the asset quality review that the European Central Bank had imposed on all the banks, once that had been removed, then actually banks became a little bit more prepared to lend, and we've seen that in the ECB's bank lending survey quite consistently. And then on top of that, we've now got the QE as well. We've also had quite a big devaluation of the euro. We've got the consumer demand picking up. We've got wage increases coming through. So in fact, there's a whole bunch of reasons why European economic growth this year is likely to be quite a lot better than people originally expected. So you will see earnings growth this year, but inevitably, and of course, it will be selective. Oil companies are unlikely to be seeing much earnings growth this year. Mining companies, probably the same sort of case. But there's a whole bunch of areas in the market where there will be some very good earnings growth, and those are the areas, obviously, which we're concentrating on.
Can you give us some examples of secular growth stocks in the portfolio?
It's tricky, really, and you know, the risk of sort of sounding blasé about it, probably the easiest thing to do is to actually pick up the latest annual report and go through the holdings there, because we've tended over the years to always concentrate on those really good quality, consistent, reliable companies that can increase the return to us. So, you know, if I start sort of highlighting a single name, then I'm perhaps doing an injustice to one or two of the other names there. We've got pretty well the same sort of holdings that we've held quite consistently for quite a number of years. They're continuing to tick over, and this is one of the frustrating things of a few years ago, is that people neglected the terrific quality of many European companies. And we've had good exposure to those, and now people are beginning to recognise them for the brilliance that some of those companies are.
Thank you. And lastly, Europe is currently a really popular investment destination, but are you comfortable with the risks of Eurozone, like low growth, high debt and geopolitical tensions?
Yeah, I mean, in a sense, you know, I just wonder actually whether that's not a question that actually, you know, for Eurozone, put UK, for Eurozone, put US, wherever you like. I mean, there is low growth worldwide. You know, that is a reality. So I think it's more important to actually just focus on the sort of the delta, what's actually changing. And what is changing is that growth is actually now returning to Europe. So am I comfortable with that growth coming through this year? Yes, I am. Do I still think that Europe remains a low growth region? Yes, I do. We will stay a low growth region along with the United States, the UK, and I think pretty well worldwide. We're in a world of low growth. But the good news is that growth is getting better in Europe. Political tensions, there are a lot of them in Europe, obviously. Greece is clearly an issue. The Greece situation is going to be very tense, I think, for the next few months. But the outcome's pretty simple, really. And it's in the hands of the Greeks. It's not, you know, everybody wants to pin the whole blame on Germany. That's totally wrong. The blame should really lie with a government that came in on a mandate that it had no way that it could ever achieve that particular mandate. That's unfortunately the tragedy of the whole situation. I hope that Greece will stay in the euro, but it is real touch and go, and it is going to be pretty tense over the next few months. But it's something which we can live with in Europe and have been living with for some time.
Tim Stevenson, many thanks.
Thank you.